Welcome, everybody. It's Friday on the Independent Investor Channel live stream. We got a special guest here, Kyle, to help us kick off 2024. Welcome to you, Kyle. It's been long removed to having you on the channel, but welcome back to the Independent Investor Channel. Kick it over to you. Get your thoughts on what you think of 2024. It's just 1 month down. There's been a lot that's unfolded so far this year. What's your thoughts on the market pulse as we're entering into 2024 and maybe what you expect here in the coming months?
Yeah, well, first of all, it's good to be back on the captain's ship. It's been a little while, so happy 2024, and thanks for inviting me. And we were just joking too that all these. Oh, sorry, let me close this off. I'm getting a bit of feedback because I left the video open. But yeah, no, we were just joking too, right? Metastock earnings, all the stuff's here. We're just joking that the wife's got real lucky transferring her Metastock to her tax-free savings accounts just before the earnings jump. But yeah, man, I don't know how short-lived do you think this is going to be? Obviously, it's unsustainable, a lot of it. I mean, the video going to the moon here is kind of just it's pretty unforeseen, but the sustainability, I guess, is the real question. Like, how long is this gonna last,
Well, what does that mean for investors? I mean, do you hold these stocks through the indexes? I mean, look, most of these large cap tech, the mega cap tech names, even if you do have a piece of the S&P or a piece of your technology ETF for the sector specifically, you own a pretty big portion of these. So yeah, don't chase. It's really incredible to watch the action in NVIDIA, watch, Meta. It was interesting. The Google quarter was a phenomenal quarter, and it did sell off a little bit. But yeah, it's fun to watch. I think if you're invested in the stock market, it's hard to not have some indirect exposure if you just don't own the stocks outright here. Amazon and Google, I own some fairly large positions on. I did buy Facebook before buy Meta before the earnings. Took it for a quick trade here, but at 40 times on Meta. There's schools of thought that would suggest that it's still cheap here with the opportunity going forward. I'm not so much. I don't know if I can see them going through a quarter without having it come back down into the stratosphere, but nonetheless, exciting times.
Yeah, I think the real concern here is people have to recognize that we just went through a wicked crash where all of a sudden the only thing that mattered were earnings, and these companies that were spending just exuberant amount of cash and just focused on the expansion of the future realized that they needed to retain a lot of it to the bottom line. So I think this is where we saw the massive layoffs that they weren't necessary. Like, these companies didn't need to lay people off, but they understood what they needed to do for the shareholders. So they laid a bunch of people off. They focused on how can we double up revenues. I mean, we've seen Google attacking basically people using ad blocker with a crazy lag in people's Chromes. Like, that was just recently. I mean, Meta, if you go on Facebook or Instagram, like, they've doubled up the ads. Like, they know what they're doing. And I think they can only do this for so long before we go back into a bit of a slower period, because this is unexceptional growth, right? But so it's just to get the recovery. I mean, when your stock drops like Meta's did, like, they understood the task at hand and they have the margins and the liquidity and the balance sheet to make that kind of shit happen, whereas most companies don't. Right. So, I mean, the big mega tech in a market like this is, I'm big for recovery plays. I know everybody's like, and I'm a big proponent too, to looking at like some of these Canadian stocks. You look at some of the infrastructure plays in the US or some of the telecoms, like some of them look cheap. Right. The problem, however, is in a recovery moment, like when they start cutting interest rates and stuff, the companies that are still going to perform the best are tech, because, when people have money again to spend, they're going to retain it and put it into growing their business on Meta, on Amazon. They're not going to be necessarily seeing a huge bump, because that's my bet with the Canadian banks and some of these other companies. I'm like, you get the flow they're going through because of the interest rate cycle. But the problem is you might get an initial bump where you make a higher than average return because they're so cheap today, but they're never going to see the same growth. Like, I'd rather pay 30 times for Google than, buy one of these companies that has virtually no growth at an 8 PE, right? And you might get a little return in the beginning, but the long run, there's just no way they're going to come close to what's going on right now. I mean, the technological stuff, I was just joking in your group saying that, once my job is replaced by AI, and by God, it is coming. We're already talking about it in my business. Once my cars are driving themselves and, you got robots flipping your burgers at McDonald's, that's when we've reached parity. That's when tech is starting to reach its era age. That's coming, baby. I can't wait, man. It's going to be scary and wild, and I'm glad that I've had enough time to make my wealth before our kids get screwed by it.
Interesting. I guess I have certainly an optimist view of the future. I think we're on the precipice of one of the most exciting times in our future. I think us talking about social media and AI certainly is the discussion now, but I remember 20 years ago, we didn't have any of this. And I think even 20 years removed of when this was introduced to us, the Googles and the Facebooks of the world, I think we are still defining the landscape. And I think there are blue pockets. I really do. And what is that going to mean for the next 20 years? I think me and you are going to be reflecting on this time as being just that, being on the precipice of it. It is
Yeah.
exciting, but I,
Exciting
d-
and
I
scary.
yeah, I do want to digress a bit, Kyle. Kyle, you've been a featured channel of mine for a long, long time. So I do want you to kind of talk a little bit along the lines of what's been going on passive income investor. I've been a fan. I've been watching on the sideline, and I've just been real proud. There's been some significant growth, and we talked a little bit behind the scenes about what this YouTube opportunity means to us, whether it be directly or indirectly. I'd turn over the floor for you because I'm selfishly interested to hear what you have to say, but just been real proud of you, and I know the investor audience would probably like to take a digression back and hear a little bit of the personal side about what's been going on with Kyle, the passive income investor. Go ahead.
Yeah, I think you get more of the personable stories, obviously, because we chat more personably off stream.
Yep.
But the channels, I mean, like I said, I enjoy doing the channel, but like we were talking, that like the opportunity that's arisen from my channel that has taken me beyond it has been
Hmm.
taking up like the vast majority of my time. I don't think people appreciate the amount of work it takes now to even make one video with the amount of time constraints that I'm just trying to manage between like two. I'd say that I have about 3 jobs now. I've realized that I read this incredible story of this janitor that basically worked. I think it was a janitor. I'd have to double check, but the dude basically worked 2 full-time jobs for like 10 or 15 years, and he became like a multi-millionaire. And I realized that like you don't have to be the smartest guy and be chasing like the 6-figure income or some massive channel growth or
No.
some. It's great if you can find one thing that you become absolutely like absurdly excellent at. But I've realized because my skills have been so broad, and I realize you don't have to be great at everything, but if you know how to run TikTok and like Facebook and like Google ads, and you know how to manage social media accounts, and you understand a balance sheet, like the value that has in the marketplace is pretty insane if you can prove the work. So I've been able to
Agreed.
pick up like a ton of jobs that I linked up through my YouTube channel that both they all pay like very reasonable salaries, and on top of each other, like it's a substantial like 6-figure income. So and again, all thanks to the YouTube channel. So I'm trying to keep the homage going for the channel by I feel like I could be putting more quality behind it, but like after 5 o'clock hits and I'm so burnt out, I'm like, if
Yeah.
I can post at least 3 or 4 times a week, I'm pretty happy with my streams that I've started to consistently do on Sundays now. So I hope people
Yeah.
get some enjoyment out of it, but it's kind of becoming almost second. I don't want to make it a secondary thing, but that's what it's starting to feel like in
Yeah.
comparison to the vast amount of work that's done before one of those videos gets posted these days.
Yeah. Yeah. So would you recommend starting a YouTube channel in this environment in
Well,
2024?
like we said, I think there. If I were to do it all over again, I'd do TikTok first,
Mm,
because TikTok is just I can post stuff there and I can get thousands of views way easier, and it's so much easier to grow there. Whereas like
mm,
we were talking on YouTube, like I've watched people do it successfully recently, and they've done it through one of like pretty much a couple modes. They're either doing it through paid marketing or they're doing it to go on other people's podcasts where they'll pay. Like I think the smartest thing you can do, want to build a YouTube channel today, take 10, 20 grand and just go on a bunch of whoever's in your niche, go on those podcasts, promote the crap out of your channel. If your content's good and you know it's good, then you should sell it anywhere and you can grow an audience relatively quickly that way. If that's the goal in mind, right? But by all
yeah.
means, I think everyone should do social media. I don't think there's an if and or but no matter what industry you're in or what business you're doing. I have seen it
Well
change
said.
people's lives through the simplest of things like just I told my wife the retirement plan is to get a cat and make it famous because I'm tired of watching these cat TikTokers make 6 figures on TikTok.
There's more than one. Oh my God.
But it's
You're
quaint,
kidding.
right? Like there's a
Yeah.
guy
Yeah.
that I watched that he mows people's lawns for free and does landscaping for free for TikTok, where he'll go into these people that can't do it themselves. They're getting notices from the municipalities, and he'll go in and say, "Hey, I'm just going to do this to help you out." He'll film it. Dude's getting millions of views, and the work he's getting from it is insane. Like there's just so many simplified
That's cool.
examples that I think make YouTube and just social media in general. Like, I mean, that's why Google's going to be a multi-trillion-dollar business here soon. I mean, there's
Yeah.
good reason for it because it's changing people's lives, right? And I don't know. I have a certain place in my heart for YouTube now. I think just because of how it's
Yeah.
changed
Yeah.
my life. And you look
Yeah.
at the brands like Mr. Beast, right? I mean, it's building billion-dollar brands. Like, I don't think we're seeing the same thing on Netflix. I know people love Netflix, but I think whatever Google or what YouTube did before Google bought it, I think it was the start of an unprecedented business model for
Yeah.
media and you know, giving people, you know, a hand at being what we all grew up watching on TV when then, like, you know, we were young. To get on TV was impossible. You had to know somebody. There was only a few stations, right?
Well
Now
said.
it's all of a sudden that's given to every single person. And yeah, you might not be getting like, you know, billions of views like Elvis was early in the day, but even if you can find and
Yeah.
carve out a little niche where you get, you know, 10, 20,000, 100,000 followers, and like I said, it only takes a couple of those people in a really high place to recognize you, and before you know it, you get other opportunities, right? I mean, I
I
watched.
I I do everything I can do to keep those opportunities at bay, and they're still knocking up my door. And we talked a little bit backstage. I'm in the throttling mode right now. I'm very, very cautious over my time. Obviously, I have other time commitments, but it's nice to be able to parlay what work I want to take on, and kind of maybe not even slow play, but because I just don't have the time. There's only 24 hours in the day, and I know I could find it if I could just carve out a little more time with my day. But I just don't have it. But I'm happy. I'm
At
certainly
your age,
happy.
man, you don't deserve the BS either.
Yeah,
It's
I
just
know.
fine.
It's a little bit. There's still BS. Yeah, I know. I know.
I was joking
I
with
know
the
for sure.
mother-in-law. She went through some issues with one of her jobs, and she just wouldn't put up with it, and she quit. And I'm like, good on you. I'm like, at your age and the time you've put in, they can F right
Yeah.
off. I'm like, don't.
Yeah.
At my age, I have to suck it up because we got bills to pay and people to feed here. So I'm like, I'll suck it up, but that's why I'm going to grind
Yeah.
it out for the next 3 to 5 years. So then that way I have that FU money,
Yeah.
enough money that I don't need anybody's bullshit in my life and I can move on to the
Yeah.
next thing, right? That's the
Yeah.
real dream, I think, right? Is just to have enough to make sure no matter what, you're covered and you can get by and not have to deal with that. Because I think we all have to.
Yeah.
I mean, I think unless you're privileged enough to be born into it or get married into
Yeah.
it,
Yeah.
I think it's good, right? It's good morals, right? It builds character to if you want to get yourself in a position of wealth, to understand like other people's priorities come over yours when they're paying you. And sometimes they're assholes. You just have to deal with it, right? And so
Well said.
yeah.
Well said. I was privy to a post that you made in my private group about your current portfolio. You mind giving the group some insights on that? Because I looked, then I looked again, then I looked again for a third time, and actually went into all the slices that you had shared there. I thought it was really, really smart. It was really well built. There was a lot of pedigree that is obviously down to the micro percentage exclusive to you. However,
To some
however, to some extent, there was some really good themes and some really good commonalities, and we were talking backstage about the power of having the bulk of your portfolio and the bulk of your money. And I know we've talked about, and we've both engaged in investments that were probably um, well fit exclusively for us as individuals, those that have been playing the game for a while, and not necessarily the masses. Can you speak a little bit along those and what you shared with the group? Because I thought
Yeah.
it was really smart, man.
I've been trying hard to offer as much clarity as I can because the problem is like my fiance is super private about her stuff and I respect it greatly.
Yeah,
And she obviously doesn't want me just like constantly showing because there's YouTube channels out there where I notice they do combined portfolios, and that's the way I look at it. Like basically what's mine is hers, what hers is mine. We're splitting like the mortgage here, like everything's pretty fair the way we've been
yeah,
doing things. But I respect that, like, she's gonna have control over this at some point or vice versa. So it's like,
yeah,
I want to make sure we're doing it in combination. So I'm always just cognizant of what she's been doing with hers. We've been like guiding her, and she's been doing most of it on her own, and she's done excessively well because she's not as volatile as I am trading things around. So she rode Meta, like I think her average buy on Meta was like 203. She rode it all the way down to 90, all
yeah,
the way back up to where it is now. Like she just
yeah,
doesn't care to like, she's like, I just want to hold it for a long time. She's like, I don't care what it does. I don't want to look at it for like, I'm like, you have the best sentiment ever. But in the perspective of our entirety, because when people look at my channel, like I try and remind them the decisions I'm making are also made around the perspective of the whole, but I'm not showing you the whole pie, right? So I've tried to make it in a way today where I posted a video where it's just not talking about the numbers, and I'm sure some people could probably work it out, give or take to a certain amount. But the whole point was I'm just saying, hey, like, look, here's how the portfolio looks in its entirety to give you like full scope of like why I make the decisions I'm making. But like you said, 70, if I had to put a pin note on it, it's between 70 and 75% is purely in indexes, between
Yeah.
Canadian, US markets, mostly US markets. The vast majority of it's in US markets. And then we probably
Sure.
playing around with 20 to 25% in individual holdings,
Yep.
which is probably, I usually don't want to do more than 10%, but typically just because of how it's kind of spread between some of Canadian stocks and US, I'm not like as concerned about it. And, we'll probably keep it at that balance at our age, because to be 30 years old, I don't think it's too big of a deal at the scale of our portfolios, to be where they're
Agreed.
at, to take on a little more risk to try and get some outsized return. Because I'm still pretty fluid that, there's going to be some massive, look at Nvidia, right? I wasn't smart enough to catch Nvidia, but you could argue about it day and night, but I have like high conviction still in Tesla now that it's dropping a lot. Like Google here, anytime Google
Mhm.
drops,
Yeah.
like I'm on that. Meta I wasn't as wise about, but back then I was also like not a lot. We were like really out of individual stocks just because I wasn't sure what earnings were going to look like. But
Yeah.
you got to take some caution, because I know I made some mistakes in my caution, but like what I told people too is like, I didn't have the same down experience everybody did. And we made a lot of money in 2020 and 2021. I mean, we went and
Mhm.
watched that movie Dumb Money, and it's so nostalgic now because, that's the reason that we got a
Right.
mortgage. Like I sat down with my wife and I'm like, how crazy is it
Nice.
that, we rode through that in crazy market. We made like crazy gains on a lot of companies. And yeah, we took some small, like some losses, but, we got out of all that crazy stuff. And, we walked away with a few, 10Xers. I mean, it's hard to find those unicorns today, right? So I'm like super thankful that, I was more cautious when 2022 hit, and I was a lot less exposed to the realm of small caps and some of the stocks we were holding, like say MindMed, for example, or even Tesla, right? Like, because, took pretty
Yeah.
much everything out of Tesla, took some massive gains. So very thankful, man. What about you though? I mean, how have you been starting the year off?
So I'll comment on that, but I will say I've known you a long, long time, and I've actually seen you evolve in your investing thesis and application. And from day one, it doesn't mean you're right or wrong. And now in February 2nd, it doesn't mean you're right or wrong. It just means that you've had the capability to evolve in your application. And I think people really need to take that to heart, man. I think people need to be critical of their application, not too overly critical, but be willing to change and not get stuck in a rut and deploy the same strategy over and over again. I can tell you leaps and bounds from where I started investing and where I am now and what I understand and what I've really ground truthed in the market. You had made a comment to me back before we came live about the power of those passive assets, right? So where you said, you might have been cautious and missed out, it didn't mean that it was for naught, right?
Yeah.
You're making those returns in a passive sense, but you're doing so from my lens in a much more defensive way. And I think that's really smart. And it's been kind of fun. It's hard to be part of an investing community and not look at others and say, well, maybe you're doing this wrong or doing this right, or everybody's got their own kind of philosophy about what to do. But it's kind of cool to see that maybe part of this game is to be able to evolve in your craft and really listen to people and what they're trying to convey. Because I think sometimes, all too often, people have a really, really hard time adjusting to change, and markets. We're not dealing with the same market that we were 5 years ago. Now it's completely different, and I think it's incumbent to monitor that, to continue to participate in markets the way that we know works over time, and just acknowledging that in 5 years we're probably going to be dealing with a significantly different market than we are now. So what do we do? You know, um,
I got a question for you though. If you roll back
shoot.
a little bit, how did you go through the crash from 2022 onward? Were you still buying? Did you end up going into some of the high yielding like savings accounts or bonds or GICs? Like, how did you kind of go through that? I'm curious it from your perspective.
I didn't touch any of the high yield stuff. Um, I was glad I didn't. My transition to high yield just came to fruition today. I've been sharing on the live stream. I did switch to Fidelity from Bank of America. I was making close to zero on my idle cash with Bank of America. Now with Fidelity, I just got my first interest payment on a small amount of savings, around 35,000, and it was like close to $100. I earned $65 all last year on idle cash with Bank of America. That should really hit home with people. So I did not get caught up in the bond craze. I did not get caught up on what I consider to be teaser rates, to be brought in at a higher interest rate only to be dropped down over time, right?
Yeah, like 3 months.
But as far as from 2022 to 2024, I openly conveyed on the Independent Investor channel week in and week out how tough it was and how I felt at times alone and independent in my application to continue to aggressively fund markets.
Good
And
for you, man.
Kyle, to be honest with you, man, I look at the accounts now, and if I can convey to the audience, because this is really, really hard for new investors to even understand at all, when markets move like they have over the last 3.5 months, you cannot articulate how quickly markets can move to the positive. Right. It
Good
seemed
point.
like a slow doldrum down from 2022. It was really rough. It was tough. And I was succumbed to a tough single stock holding that I've been open on the channel with. And, I still hold 8,000 shares of the holding, and holding on to the fact that they're significantly less valued than their cash right now, and some hope, not even on some whim of fundamental, that they're in a niche space with stationary power generating, that they can make a go at that. But as far as fundamental right now, it's really, really a tough investment. So that double whammy for me really did test what it is. And there was a time there where I was like, man alive, it almost seems like you're throwing money into a vacuum. You know, you're funding markets at thousands of dollars a clip every single month. And it's like, man alive, you wake up every single day and it seems that the markets are going down, down, down every day. And it's just in this last 3.5 months where it's like, bam, there it is. It proves again that those steadfast fundamentals, they always shine, and they shine at a place where it's tricking a lot of people. It's tricking a lot of people right now that are on the sidelines, and or they bought into bonds last year. They all thought that recession was going to hit in 2023, and that those same rhetorics have rolled into 2024. And I think we're on the precipice of quantitative easing. I'm not a huge fan of it. I'm glad that Jerome Powell came out this week and said what he said. I think it was prudent to do so, but I think we might be on a multi-year kind of look. If we can succumb or subject the markets to these higher interest rates, and kind of come out of it the way that we have, and have the Fed navigate the way that they have, I really think we might have more positive ahead of us than negative. I'm not suggesting that the first half of 2024 might not be choppy, but I don't know. That's just my pulse of the market. And I'm a lifelong bull, you know that, but
Join the club.
it's hard. Yeah, it's hard to not be bullish on these markets. Look at the track record over the last 25 years. It's nothing less than spectacular.
Yeah, and I want to put into a reason here too, because I've noticed that there's been so much negativity, and actually I want to talk to you on the other spectrum of it when it comes to the inflationary pressures and just kind of how that's perhaps affecting you on a personal basis. But I think one of the things that's been irking me a lot is people just shitting on the U.S. dollar so heavily. And I think when you live in the U.S. economy, you kind of get stuck in the concept of the reality that, like, I can only experience what I experience here with what I'm doing, and you forget that, like, yeah, you're experiencing inflation in your own market environment, but take your US dollars and go look at the impact that inflation has had on so many of these other economies. I mean, if you, like, I was showing people the comparison, if you just held US dollars and you lived in Brazil, in less than a decade, you'd have been up 60% just in the currency conversion. Same in Canada, same in almost every other country around the world. The US dollar is stronger than it's been in over, I think, 10 or 15 years. And I'm like, and I don't think people recognize that in a time when the government was printing more money than they ever have in history, at the same time having a global domination of people chasing that currency to the point where it's holding decade highs, is just incredibly hard to wrap your mind around. And it just showed that in an inflationary pressure and a global state of fear, where does everybody want to go? They want to go to the U.S. They want to hold U.S. bonds. They want to hold U.S. treasuries. They want to hold U.S. anything that's related to the U.S. dollar, right? So, I mean, and there's a fun correlation, because as people trade their U.S. dollars for companies and stocks, like, you can see major fluctuations between the market and the dollar, because typically when assets explode, the U.S. dollar value goes down because people are probably pulling it out of cash-based assets like money market funds.
Yeah.
But it's a fascinating thing, man. But to kind of round it to the inflationary side, I feel really bad because we're privileged enough to be in a situation where I'm watching, like, I've only been in this building for like this place we bought for like 4 or 5 months, but I've already seen the increase on HOA because of inflation. Like, I'm already seeing bills going up because of inflationary pressures. But at the same time,
Yeah.
like, it's so incremental. Like, I mean, we're very fortunate that we could pretty much just pay this off and still have a ton of money left over. So I'm like, I feel bad, almost icky talking about it this way because we're so young and we're privileged enough to be in this situation. But I'm curious too, are you seeing like inflation hit you or perhaps your family like hard? Because I mean, it is substantial how much the prices of things have gone up. I mean, there's no arguing it, even if you're rich. Like, I mean,
I
things have
I
gone
would
up. Like,
I know I would be neutral on the topic from one perspective and very much insulated from the topic on another. I really try to convey as much as I can through the channel so people truly understand my situation. I'm not a property owner right now, and as much as that hurts me, it also helps me because where I'm socking away money for that eventual maybe correction in the market, which I'm kind of on the fence that I don't think that's really gonna happen the way people are calling it to happen. Um, I hope I'm wrong for my own selfish benefit, and I hope it happens right at around the time in about 3 years will I'll be emerging back into the real estate market. But, when I say insulated, I live here, free in New York, in one of the
you're very
most
fortunate.
expensive city
Yeah.
it's very atypical, and I don't want people to misconstrue that as, Ryan's got a halo." No, no, it's not like that, it's part of my benefit, etcetera, and,
Yeah,
you know,
but
we
take advantage.
give up
Why own if you don't have to, man? I mean,
for
we I
real.
didn't want to own.
Well, it's tough too, Kyle, because, you know, I look at the adjoining states here, I'm right next to New Jersey, and you're talking about 850 bottom end for just a regular single family home.
Yeah, but you're
That's
not gonna live
to
there.
not gonna live there. It's not long term. If it was, that might change the gig a little bit, right? So, you know, I'm not commuting from Pennsylvania. So I live 2 minutes away from work. I fill my tank up, my Tacoma. It was just a funny video I posted to the channel today about the wheels. I got some comments in the channel. I fill my tank once every single month. You know, I'm able to go to the gym. I'm able to spend some really good quality time. I'm able to vacation when I want. So I do have that freedom. I've owned 2 homes previously, and I do enjoy that support, but you're in Home Depot here in the United States every other day when you support a home,
Yeah.
and you're having to succumb to that, and the tax increase, you're talking HOA, the tax increases is something that I've put up with personally. It's just a part of the play in the game.
Yeah.
And I'm subject to not enjoying some of the tax write-offs that are possible through home ownership here as well. But I hope people truly understand what I'm trying to do. And I feel like I'm a little bit isolated on the stock side of it to where, you know, I'm playing a game right now. Markets are at all-time highs. I get it. I really would love to diversify into more tangible assets, but the timing for me right now, it's just not there. It is just not there, and it's not intriguing enough for me. If I was in a down market, like I bought into Detroit when the mortgage-backed security crisis and people thought I was crazy, I didn't have one person tell me this is a great move, Ryan. You know, I picked up my house there for $140,000 and there wasn't one person that said, "Ryan, that's a good deal." Right? And it ended up being the most lucrative real estate deal that I did
Oh, good for you,
because I
man.
bought into the but now is it is it expected that we put through fate to the wind here and put that kind of capital to risk? It's just, could I do it? Yes. I think it speaks more to my discipline in choosing not to do it at this particular juncture, and that's just where it rounds out right now.
It's
Right,
tough for
right,
people,
wrong, or
man.
different.
It's a very
Yeah.
personable thing, right? I think I really like some of the the real estate channels out there that like 𝑪𝑎𝑛𝓋𝐴 is super awesome. And I think he always puts it into perspective too. Like it's not a one answer fits all. Like I think a lot of people are like, oh, you have to own real estate. You have to own it. I'm like, I didn't want to own like in 2019 before the pandemic when we were initially like me and my fiance were going to move out, like when I was ready and I'm like, let's go before I lost my job and my whole career went in the toilet during the pandemic. Like back then I could have rented a 2-bed, 2-bath for around $2,500 a month. And that was my mindset. I'm like, okay, like that's feasible. I don't want to own. I'm not going to put money into this crazy overpriced real estate market here. Forget it. And then all of a sudden, like, this last year rolls around, we're ready to move out, and rent is $3,500 a month now for the same apartment. I'm like, that is an entire gross take home pay after tax on somebody making over 50 grand a year. I'm like, you know how nuts it is to pay 40 grand a year for rent? I'm like, I'm not going to do that. So we were thinking about moving to out of province to somewhere much cheaper. And then just either renting or owning somewhere where it was cheap as hell. But the problem was his family. Like we've gotten so old now that like we're super glad we didn't leave the province because we're so family oriented. And I'm very thankful we didn't. And after looking at like 30 properties and just running the math, like we actually found something fairly reasonable that was well within our price target. And the first place we put an offer on, we got it. But if this place now cost to carry with our deposit, even with this super high interest rate we're paying at like 5.8%, like it's still, I think 2,800. We're saving. No, it wasn't. It's like 2,300. It was like 1,000 less. Like we're easily saving 12, 15,000 a year over renting. And again, the price goes down over time. And we've made like crazy extra payments already just to keep lowering it. So I mean, like, to be in a situation like that is better for us, but it's not better for everybody. Like, I think owning is insane. I'm like in Canada here, I'm like, I'm not going to buy a house for $1 million. If that was the case, I'd leave. I'm like, I'm just not doing it. So
interesting. That's a really interesting perspective. I live in one of those pocket markets here. Manhattan, lower Manhattan right now, the conversion of old office space is alive and well. And you're probably talking about 2.5 million as a starter for around 1,000 square feet of space. That's you do get 2 bedrooms with that. Do not talk to me about 3. You get 2 bedrooms, and it starts at about 2.5 million. And those are all cash buyers that are stepping into those properties, young couples, no children that are stepping into those opportunities. Rental rates are at all-time high in New York City. So those rental rates absolutely back up the statistics that you're talking about. Even in here in the 5th borough that I don't even want to admit that I live in, is around 3,200 probably on an average, but that's for a total dump. I mean, that's for a space. That's for the honor to live here and have access to the city, which this city bleeds money. There's no doubt about it. I just so happen to be on the outside of that money, not on the inside. But I tell you what, it's the same in Toronto, right? If you're on those there's money there, and it's great for those people that are in, man, because it is crazy, the opportunity, but you got to pay the
piper. It's hard to get out though too, right? Because I mean, we figure we'll never sell. Once we pay it off, we just rent it out, and then if we want to go live somewhere, the cash flow it'll produce is just way too ridiculous. But the problem is like I don't think people do enough due diligence on, like you're saying. I think there's pockets everywhere, because I mean, if you look anywhere, like anywhere where we're currently living, like you're paying $1 million for just about 800 square feet. We got a quote on a new build, 850 square feet, $900,000 plus they wanted 60 extra thousand for parking. By the time you're closed, I'm like, I can't put $1 million into 800 square feet. There's just no way, right? So I ended up ditching a realtor I was arguing with immensely because he realized we had more than we needed to put a deposit down. So he's like, why not just put the extra money in an account, use it to float the property and see where you're at in a few years. But I told him, I just, in my mind, I would never be comfortable owning $1 million property. I just wouldn't. I'm like, it's just far too much capital at this stage of my life. So after getting rid of one realtor, 30 properties later, like we found a 30-year-old building and we ended up getting 1,300 square feet for a hell of a lot less than $1 million. Like
outside the box.
Yeah. And
love
it's just, and we love this place. Like it is built for comfort. It is not built to make money. Like it's, the HOA is a bit higher because we are paying like $950 a month, but at least it's all inclusive, right? So that's, we get security and stuff, but at least it's all heat, hydro, water, all that stuff. But that's the price we're paying. But again, we're saving hundreds of thousands of dollars. So it's like, there's no amount of HOA.
New York has transitioned to an HOA. You'd be hard pressed to find a property now that isn't owned by a conglomerate that has went ahead and wrote those bylaws in to capture those those home ownership fees. Very difficult. You can run a search in Lower Manhattan and actually identify a few, and I think they're being gobbled up. For the most part, you're going to be in it for a pretty healthy HOA fee, and we're talking thousands and thousands of dollars per month.
Yeah, because yeah, it's
Crazy.
based off square footage and whatever and all that stuff.
Hmm. Hmm.
It's definitely a challenge, and I feel bad for a lot of younger people. But honestly, like if you're young, I would just leave. There's just no point to be in these crazy overpriced cities. Again, if it wasn't for our age and family, it'd be a whole different story. We could have moved to Alberta, semi-retired already. But
Yeah.
you know, it's not all about money, like you said either, right? Like, you know, it's going to cost us a bit more to live this lifestyle, but you know, to give up, like, I don't think there you could put a value on like what we currently have with our family. And I don't think like I think I would have regretted it immensely. I mean, we could have for what we paid for this property, we could have owned like a 3,000 square foot penthouse in like Edmonton or something, or you know, a fully like beyond a nice like 3-story finished basement home sort of a thing. But honestly, like I don't think that value. I mean, it'd be fun to make a YouTube video being like, hey guys, 31
Yeah.
and semi-retired, we can cash flow enough to pay our basic bills, but you know that value is just not there for me
You're
anymore.
probably more poised to make that move and have access to income because if nothing else, you're defining a landscape where you can bring in income no matter where you are on the globe. It doesn't have to be in Canada, United States. It doesn't have to be abroad. It could be
That's the thing,
anywhere,
because we work from
right?
home. Yeah.
So that's the thing here in the United States is very fickle. That you know, a lot, if not the majority of the business is centered around our cities. And you go rural here in the United States, you can be careful because you're going to be not around any activity.
Yeah.
And you better have that connection to that money because yeah, you can own anything that you want, but you gotta be where the action is. And I think that's what's attracting a lot of our youth and beyond suburbia here in the United States. You'd be hard pressed to drive through some of these cities, and they look like ghost towns, Kyle. You got an old gas station that doesn't work anymore. You got an old
Yeah.
abandoned church, and there's no people there anymore. They've
Yeah.
all left, and they've all flocked to at least suburbia to upgrade and have a little more access to commuting distance to businesses. So if you
It's
want to get ahead, you know,
yeah, it really depends on where you're at and what your things are. When it comes to foreseeing when my mortgage will be paid off, honestly, this is the hardest debate that I had mentally, because at the end of the day, like I don't want a mortgage. Again, I understand leverage and utilizing debt. I believe in it. I'm not against it, but just from like my own personal like stance, I'm more like Dave Ramsey. I don't agree with that stance of like having all your debts paid off and no mortgage. I get where debt makes sense, but for me personally, like I hate having a mortgage and I would have just preferred to pay it off. But then I
mm,
realized the sad reality of I would have a lot less capital in the market. And because we didn't fully pay it off, the money we've had in the market has offered a way higher return than that 5.8%. I mean, we're up 20% since the money we put in at the lows of the market when it tanked. So, I mean, that's the
yeah,
hard debate, right? Is like finding that balance of we don't want to put it all in the property because then we'd have, you know, we'd still have some money, but nothing like the returns we're seeing now. I mean, the returns we're
yeah,
seeing now could get us to $1 million like net worth in the next year. Like we're getting damn close just because we left that size of capital in the market.
yeah,
And my jaw honestly hit the floor when I run the math on like what our net worth is just from having no debt, just keeping some money in the market and just, you know, getting this property. Again, it's combined to keep in mind, like, you know, I'm fortunate enough to be in a situation with a wifey so that has a job. So, I mean, it makes a significant difference on the cost of living for us and paying this stuff down. But honestly, I figure we'll pay it off in the next 3 to 5 years is the goal. I don't want to pay it off early because there's penalties, but when the renewal comes up, like
mm,
we're putting an extra 20 to 30,000 a year. I think we're allowed to put an extra 15% a year toward
mm,
the mortgage of what we owed, which is a pretty big amount. So we try and put 20 to 30 extra thousand a year on it. And then by the time the renewal comes up, I'm hoping if the market has stayed as strong as it has and we see a greater return, like I'll easily, you know, I'll sell because we have a good cash position too. Like I'll just take the rest of the cash we have. I'll sell off a chunk of the portfolio and I'll just get rid of it because it's, you know, it's a decent sized payment a month that like I just don't think is necessary for, you know, our stage in life. You know, again, very privileged to say that. I
interesting.
know, like, you know,
Um,
it's one of those things, but we set ourselves up. I always wind back to that
yeah,
conversation of the 10-year prison sentence. Everyone's got to serve a 10-year prison sentence. Like, you know, I did it. That's how I'm here. I'm like I lived off nothing. Like I've been broke
for
for
real, for real.
yeah,
That's
9
real
years.
talk.
I
That's
mean,
real talk for the audience, man.
there's a
I
guy, I just want to anecdotally, this guy I think put a great
please.
point. Sorry, what's his name? Dave Lee, I think. Awesome channel. He's all about Tesla, but I remember watching one of his videos where he anecdotally was talking about how he grew up, and he was joking with his wife because he grew up in a place, I think somewhere in San Francisco. I can't remember where, but like he remembers getting up one morning and there was a roach on the end of his toothbrush. And he said they didn't have proper heating. They had to duct tape the windows. And he's like, I lived like that until I was like almost in my 30s. He's like, I wasn't like able to like buy a place or do anything. But I'm
Yeah.
like, that's how you had to afford to get to where you are now, though. Most people don't have the privilege, but they want to live like they have the privilege. I'm like, you know how much
Mm,
like I've had
well
luck,
said.
but I've also sacrificed a lot. I'm like, I've never owned a new car. I've never like, I've given up so many luxuries.
Yeah,
And same with the wife. Like, we were fine going to Costco to get $1.50 hot dog and drink for a date night. Like that was
for
fine
sure.
for us.
That's
Again,
awesome.
most people don't want to do that shit. So they don't have that
No.
privilege to be in their 30s to be like, hey, like, mortgage, who cares, this, whatever. But, and again, even now with the money we have, we don't do stupid shit. Like we're not still living the same lifestyle, right? But
Yeah. No, that's the key. I've been adhered to a lifestyle that I picked up in my early childhood. I'm a very happy man, and say, at 46 years old now, a big key to my success has been able to, quite frankly, separate, really, really separate and put my money on specific objectives. And I would be going against those objectives. If I surrendered, just put up the white flag and said, I'm going to surrender on those, it would be surrendering not the dollars, it would be surrendering the plan and seeing that plan through. And I think I would feel more bad than vindicated, or that I had won a race or something like that. It's just not about that for me. That's as insightful as I can give into, my mindset about what you're talking about, the hot dog at Costco, $1.50. That's legit. You
that
know,
didn't inflate.
you know,
You need a
that's true.
membership, but we use our dad's. We'll take her dad's membership and we
Yeah,
slip
yeah,
in. Trust me,
yeah.
we are is frugal. I don't want to say cheap because I think frugal is the better word for it.
Frugal, and going through that, it'll set you up to appreciate everything. You
Well,
appreciate
again,
the
I
dollar,
think it
appreciate,
morally
yeah.
brings you back down to earth, right? Because I know some people that came into some substantial wealth, and they are not the same people I used to know, and it's sad
Mm,
because they're
mm,
not simple. Like they're not people I could just go out and have a coffee with anymore. And we talked about
yeah,
like how wealth changes you over time, especially substantial wealth, because these people
interesting.
used to come over all the time, and now they don't. And anytime we hang out with them, they're doing really wealthy things, and they're like, because we have money, they're like, oh, you should come with us and do this, or when you're doing that, or you're doing a cruise, like invite us, we'd love to get an excuse to go out. I'm like, why can't you just come over and chill? Like, because I still hang out with the same friends I went to high school with, and they're not as like lucky or has been in a situation, but I don't judge them
Yeah,
for it. Like I still hang out with
no,
them. They
yeah,
still live with their parents, they're in their 30s. Like I have no and no
doesn't
unjust against
matter.
them. Like I'm not judging them
Yeah,
for it. They're just
I
friends.
know.
I'm like, it's life, like family and stuff, kind of. I think you supersede that to some level if you're not careful when wealth kind of catches up to you. But so I mean, that's why I kind of appreciate some of these CEOs. Like, unfortunately, as much as people hate him, like Elon Musk, man, I got to give the guy some credit because like
He's
that
a
that
stud.
dude lives in a way that I don't think people at his level, like you look at
It's
Jeff Bezos and
badass.
stuff, or even Zuckerberg and the way they're spending money and how they're trying to hide how they're spending it.
I know.
Meanwhile, Elon's pretty much an open book, living,
He's
a
pretty awesome.
very unusual lifestyle. Again,
Yeah, it
the
is.
guy's not perfect, but I'm just saying,
I hear
it's
you. Yeah.
it's
Nah,
it's friendship and wealth, or friendship and family, right? Like is the real wealth. I mean, that's something that and it's another thing too, right? That I feel bad because I think most people's issues is their postal code. Because I've kind of put myself in a situation where I've realized that I have endless opportunity because the people that are around me have a lot of opportunity and they're living in like higher valued postal codes. And I've realized my life really changed and I guess that's what they say, like you are the sum of the five people you hang out with. Because I feel like
yeah.
even if I lost all my work tomorrow, Like I joke with my one buddy, he's like, yeah, if you ever want to come back, like I could easily work 3 days a week and make substantial money with this guy just doing, what I used to do back in the day. And, same with other people I work through, like, oh, if you ever want a job, like, I feel like I have such an abundance of opportunity where a lot of people don't. And sometimes it's also sad because you realize a lot of this is just postal code related. Just like, if you hang out with broke people, you're not going to see the same opportunity as if you just have a few friends that, and again,
Yeah,
not hanging out with them just because they're rich. I mean, just because,
for sure.
family
Yeah,
or nice people and they're just as chill and you can get that vibe off them, it's great. But I realize what a substantial difference that makes on the outcome of like your financial freedom and future. It's kind of
well said.
an interesting reality. But yeah,
Yeah,
man,
well
I don't know,
said.
family, love you, still hanging around. It's great.
Yeah. Yeah, man, I'm still hanging around YouTube. I guess I
For
find this
now.
small pocket of people that really appreciate the message. And I always say that the success, I guess, and it doesn't have to be generated by me. That's why I like having guys like yourself and many of the others in the community come on and share stories. It's not all about me. It's not all about you. It's about collectively helping people. I'm going to do my thing no matter what. And hopefully us conveying our thoughts about money and the psychology of money is what it really comes down to, and a lot less about picking the perfect investment. It's how you deal with money. It's how you enter the market prepared, not realizing that your investments are not going to be meta every single day. And unfortunately, that's the damnable misery, is people get used to those returns, and it's like, well, I can just duplicate that over and over and
Yeah,
over
it's
again.
it's not possible.
It's just, yeah,
It's like Michael Burry, man. I love watching these people short stocks and get wrecked. I'm like, it's one of my
yeah.
most memorable moments ever in investing was when I watched Kevin O'Leary, like when I was probably 23 or 24, suggest some stocks, and I watched them get absolutely devastated. And it just hit me like a bag of bricks that, like, they never meet your idols, I guess, but I just immediately had that recognition that this guy doesn't know any more than I do. He doesn't matter how much money you
Well
have,
said.
it's the same game. It's the same exact
Same
game.
game.
And whether you got $5 or 5 billion, you have the same problem and you are going to make the same mistakes. And it's like you said, like there's no perfect portfolio. There's no, perfect valued house for like, it's just it's again, personal finance, right? Like it's so hard to direct somebody properly. They just kind of got to make the mistakes and kind of go through everything that you've gone through and I've gone through and, figure
Yeah.
it out. But yeah, hopefully they find it in a way where it doesn't drag out or they do something detrimental, because the debt thing scares the shit out of me, man. I'm glad that ensued on me early on, because God,
Yeah.
I
Yeah.
know people in their 30s that are 50, 100 grand in student loan debt, and it just breaks my heart. I'm like, you're so screwed. Like in this market, you're going to have like what I went through, I
Yeah.
thought was hard, but what you're going to have to go through is going to be 10 times harder. And it's
10
just,
times.
you almost cry inside. It's so sad.
You do. You
Yeah.
do. Yeah. It's been one of many very important liberating factors in where I am financially.
Yeah.
Is eliminating that as early as I can and enjoying debt-free years and stacking those debt-free years up on top of each other. And I will never go back. Never. That
Yeah.
that scares me the most, Kyle. That scares me the most. I'm not worried about a down market. I'm not worried about owning a stock that goes down. I don't care about any of
You
that.
felt the pain. You've been there.
Well,
I've been
I've been
there.
there. It sucks, man. And sometimes what scares me the most is people who live in that and don't realize it. Um, and
A lot of people. A
a
lot of
lot
people
of
don't get brand
people,
new cars, man. A lot of people get car debt. A lot of people get all kinds of debt. And I
um,
I'm telling you, you can avoid it. You can buy
you
cheap
can
cars
avoid
for
it.
cash. I've done it my whole life. I've never gotten a lemon. Get a good mechanic to check it out. Don't tell me a new car is more reliable than one with a
No,
hundred
it's not.
thousand on it. I've never owned a car with
Mm-mm.
less than 100,000 kilometers, miles
No.
on it. Never,
Yeah, yeah,
never had a car
yeah.
below that. And they
Wow.
all lasted, 3, 5 years. And when I haven't paid more than 10 grand for a car Canadian, I mean, that money that I've
It's
saved has
awesome.
been exponential, right? Like it's just little
Yeah.
things like that that
Little things.
substantially go crazy. Especially like you're
Yeah.
saying, like right now in the market's just perpetually. I mean, anytime in the last decade, if you just put a little bit of money in the market, like my God, and then you start asking yourself, like you're saying, right? Like it's not just a $30,000 car. It's not just a $5 Starbucks. You go back over a decade, and that one $5 Starbucks was actually worth $30, like 20 or $30 all of a sudden, right? So like all of a sudden you start
Awesome.
recognizing like, these luxuries, like a $30,000 car today is 10 years ago is actually like $100,000 car. That's what you just gave away. It wasn't a $30,000 beater you bought. It was a six-figure insanity. Like, and I don't think people ever see it through that lens. So they're forever stuck in that, not caring about debt, right? Because like I used to be, I had like $25,000 in debt, and it took me 3 years to pay it off. And oh my God, the pain of that was the worst thing I ever went through. But that's what had to happen to get me to where I am. I mean, that debt was literally, I said I would never do it again. And, I wanted to find opportunity beyond debt. And all of the decisions that came from that debt really changed the outlook of where I'm at today. So, but hopefully people don't have to go through it. Hopefully they're listening to you. Hopefully they're listening to this.
Hey, well, I tell you what, man, we're just getting into February here, 2024. This is a stint in time here on a Friday live stream, Kyle, but I want to thank you for taking the time. I know it was a little more than you committed to, but just enjoy the hell out of catching up with you, man, and wish you all the best in 2024. Open door policy on the channel, man, and we'll continue to monitor this deliberately going forward, and good times going forward for sure, man. Good luck to you and the missus, all right? And we'll talk to you soon, all right, brother?
All right, peace out, everyone.
All right, man. Later. Yeah, very cool, man. It's great to see Kyle. It's part of the why I do what I do is the community. We were talking backstage about why we do what we do, and there's been some people here commenting a little bit on the fundamental aspect of the channel. None of that stuff changes. We continually sow those oats for people and share those fundamentals. But I think the more you immerse yourself in the message of the channel and what we're trying to do here, and how we carry ourselves. I mean, sitting back and listening to Kyle, do you think for a second that he doesn't do those things that he shares on the channel? Look, I come on to YouTube. I'm the same. I would rather just share what it is that I've worked in. Is it right, wrong? I'm not sure, but there are some results there to be rendered. And I'm not suggesting that people can't get far and away better results by maybe taking a different path. This is just mine. And what works for people, and really trying to curb expectations, because in a dynamic and ever evolving stock market that we have right now, accelerating at a pace that is just alarming. It really is. I think it is incumbent upon investors who do see the value in generating personal wealth and starting it as of yesterday, identifying the urgency that there is in saving capital. Whether or not you want to participate in the stock market or not, that's up to you. I don't care. I share openly that I do that, and that's just what I do, and it's a major contributor to where I'm sitting as far as approaching the $600,000 mark. I talked to Kyle this evening about how quickly things can accelerate, and for those that were steadfast in coming on and visiting the channel on the live stream, that for the last couple of years, I would come on and I would give exactly what I thought was going on as far as a negative pulse. There wasn't a whole lot of trying to find a needle in a haystack through those markets. Market conditions were just really, really poor, and coming off of what we incurred with inflation and the impacts from higher than average inflation, which I think we're starting to obviously curb those now, with the interest rates falling and really kind of basing below 4 right now at the Fed rate, which is a positive sign going forward. I think as long as it's carefully deliberated upon whether or not it's prudent enough to start cutting those rates. I cringed a little bit by the March discussions. I thought, that's a couple months away. We don't need to march into that so fast, no pun intended. We just need to monitor financial markets, because I think there will be some weakening, especially in the real estate market. And I think rightfully so. I look at I monitor real estate markets, and I see a whole hell of a lot more price cuts than I do price increases. And I'm not seeing a whole lot of inventory, and I'm also not seeing a whole hell of a lot of buyers that are excited to jump in with both feet with a mortgage that's close to over 6%. I just don't see it. I'm not one of them. I hope I'm right. Maybe I'm not. Maybe everybody and their mother is just throwing fate to the wind. But I give people a little more benefit of the doubt in suggesting that there's probably a lot more calculative buyers out there, and they'll wait. They will wait because they know that inevitably things have to kind of roll off and soften up a little bit. But in the meantime, markets are absolutely on fire. I'm slowly adding. I didn't get to mention, Kyle just mentioned quickly the Canadian banks, and he offers a lot of content on the Canadian banks. But Canadian Imperial is one of my favorites that I've actually got a buy order in, and we'll post on Monday. But 12 times earnings with over a 5% yield on there. So we'll increase that position a little bit. And those are the types of moves that I'm calculating, taking measure on to share with you guys. It was cool. The interest rate switch and the seeking of that on idle cash. Not necessarily a hell. I'm making more on the idle cash than I am on some of my dividend payers. One of my accounts paying 4.99%. So you have to be kind of careful introducing capital to risk when you've got a for sure thing there on the idle cash in the money market accounts that are held in a lot of these brokerage accounts. So hopefully you guys are looking at that and looking at it hard. It was a lot for me to uproot a 25-year relationship with Bank of America, but man alive, it was probably a long overdue move for me to move to Fidelity, and it's been nothing short of remarkable as far as my opinion on this new broker, and it's showing up in the green because I'm making some interest payments that have gotten my attention. Whereas before I was becoming unfortunately used to getting paid zero on my idle cash, and I think that was a really good positive move. We touched on the tech and what's going on right now. Look, you're not going to catch every shooting star that's firing away from Earth, and Nvidia and Meta just so happens to be. I would cautiously remind you, and Kyle talked about a little bit, when it dipped down to 90. I remember it as low as 120. It might have dipped down even further than that, but just they couldn't get out of their own way, talking about how dysfunctional the company was. And this was just a few short years ago. And for those investors that held true on that, you've been paid to hold true. But I think on the other end of the spectrum, we have to be careful looking at this meteoric rise in the stock price and take it for what it is. Look, if you own the S&P 500, look at how much of the percentage of every dollar that you have in every share that you have of the S&P 500 is devoted to Meta, which is a top 10 holding the S&P, right? You'd be, satisfied to know that you do own a pretty good piece of that market. And quite frankly, I'll sit back and be a spectator in a market where the Fab 7 is driving the tippy end of the spear. What concerns me is the lack of performance from the other 493 stocks in the stock market, and that these earnings, as good as they are very, very isolated to the top companies in the S&P. But we'll have to just live to fight another day, and we'll continue to monitor the markets as appropriate, and we'll continue to enjoy this rise because it's never as bad as it seems, and it's never as good as it seems. I say that all the time, and we're just in that it's never as good as it seems, even though a lot of you guys are probably really excited to see some of the performance of the market. We got Michael in the house here. Welcome. It's good stuff. And Mick J. Yeah, it could get out of its own way. That'd be awesome. Stay above a zero and avoid a delisting. That'd be successful. Dad's in the house. Good evening to you, my friend. Very cool. And Jared, awesome to see you, man. Very cool. Victor's asking about the Tacoma. How many miles you got on that? I got 30,000, and I just paid it off last month. So I'm pretty happy about that. That'll free up that was a $450 payment. And unlike Kyle, that was my first new vehicle. I did take my old one. I traded it in. I put a little cash down, financed a little stint when the interest rates were significantly lower than they are now. And I'm glad I did now, because I know myself, and I do actually keep vehicles for a long, long time. And it's one little luxury that I actually provide myself. That um, hey, you got to live a little bit, I guess, right? God bless America. We are also fortunate to be able to invest in the American markets. Yeah, I take on this philosophy. Um, I think it's dollars well spent in becoming a participant in some of our good companies. Kyle talked about our telecom companies in a little different light that I'm seeing. I'm seeing some significant value in some of our telecom. Speaking of AT&T, Verizon, T-Mobile, American Tower. Now, those are some companies that I think they'll probably gain some favor here in 2024. Tough to say. I say it on an island. I could be wrong on that, but hey, what's new? I've actually bought Comcast and Verizon here pretty heavy beginning of this year on a fairly interesting dog theory of 2023, thinking that they're probably going to gain some favor in 2024. But I totally agree with you in that sentiment. We are extremely lucky. Yeah, when Lambo, I just got done explaining the Tacoma, Maddie. So happy New Year to you, brother. It's great to see you, man, and all the best to you here in 2024 with the everything that you've got going on with your projects, man. Thanks for being part of the community. I appreciate you. Again, Michael's in the house. Very cool. Want to give everybody a shout out. So the Tacoma looks good. Yeah, I hardly drive it. That's the problem. It's a blessing in disguise, I guess, when you've got the opportunity to live so close to home. So I bought some Wells Fargo. Very good. The banks are looking pretty saucy here. They always look saucy. Very cool. And we got most of these other questions and comments out of the way. Making sure. Very cool stuff. D's been with me a long, long time. It's great to see you, Dan. Thanks for coming on. I appreciate it. We're just cutting teeth here in New York, man. And never a dull moment here, that's for sure. Which is most of what I spend my time doing. Need those rims on my 4Runner. Those were built for the FJ Cruiser and the 4Runner. I say that in the video. The specs on it on eBay actually say that they will not fit my vehicle. That's wrong. They do fit a Tacoma, but they're not built for Tacoma. They are meant for the 4Runner. Now, I did opt for the 17 version. There's some versions floating around to 16s. I certainly wouldn't opt for that because your 4Runner is bigger than my Tacoma. But I like the 17s. They're nice. They're big enough to where they get your attention, but they're not so overbearing that they, slap you in the face. But yeah, I really like them. I recommend them. And the matte black is awesome. Hit me up DM. I'll send you the link on where I found them. I got a really good deal. They were $917 for a set of 4. So that helps you a little bit. That was aimed at helping a lot of people try to understand what it is that I kind of put out there and making those purchases. And I was about 98% sure that they were going to work. And I was pleasantly surprised to discover that they absolutely worked, and just wanted to convey that through YouTube to anybody that was seeking out that information. But awesome, guys. We'll wrap it up, and I'm going to give a last thanks to Kyle for coming on. Independent Investor Channel. He's one of my featured channels. And kick over, help him support his message. Is growing really well. As all of I was looking at my featured channels list, and Matt Money was in the group here. These guys are really, really brilliant minds, and Becca, and all the featured channels, the Independent Investor Channel. We're glad to support them. They're part of the family here and part of the community, and growing wealth each and every day going forward, man, toward an inevitable end. And it's going to be an exciting end indeed. So, guys, I appreciate you tuning in. Fastest 60 minutes on YouTube for sure. We'll be back with you next week. Have a great, great weekend, and we will catch you next week.